Thanks for joining us. And Yvonne, I hope we have you here as well. Let me just do a quick, fantastic, great. So our next conversation will be continuing the conversation around financing, but this time we're looking at it in terms of, what are the kind of business models that are coming out for financing, especially electric two-wheelers. We know this is the sector that has the lowest capex costs, where there's already a huge market. Estimates are around 50% of all vehicles across Africa are two-wheelers, and we know in countries like Uganda, it's something more like 75%. Here in Kenya, it's at least half. So we'll have a wonderful set of panelists here today. Daphne will be our moderator. We have David from Mkopa, Thomas from
Sorry
Mogo.
to interrupt.
Yes, please.
Sorry to interrupt. Could you put the right slide for the session? I think you shared your notes.
Oh, apologies. Very funny. Thanks, Paul. That's what happens. So yes, well, I've gone through it. Thanks, Paul. But yeah, we're very excited to have David, Thomas, and Yvonne here. Yvonne, I hope you are able to share your screen and join us here. And I will go ahead and hand over to Daphne. Thank you very much.
Okay, welcome. We are here to explore various business models for financing commercial, electric two-wheelers and three-wheelers across Africa. So we realize that Africa has seen many startups and local companies investing in the e-mobility industry, and mass adoption of this technology in rural and peri-urban Africa is highly dependent on the choice of business model adopted in financing these technologies. So today we have with us representatives from 3 innovative asset and business financing companies, which have experienced tremendous success in Africa's e-mobility sector. So we do have a representative from Mkopa. Mkopa is the pioneer and global leader of connected asset financing that offers millions of underbanked customers access to life-enhancing product. In the last 10 years, Mkopa has successfully deployed the pay-as-you-go model in several countries in Africa. So we do have with us Mr. David Dambaga, the Managing Director of Mkopa's Mobility and Mkopa Labs. And David has worked with Mkopa for the last 10 years and has successfully developed a wide range of asset financing products and benefited over 2 million customers in our country. So David, welcome to our session, and we are glad to have you. Then we do have Eleving. This is a vehicle financing company that spans across Africa and Asia. And this Eleving Vehicle Finance is an entity that oversees Mogo's operations in the African continent. Mogo is a reliable and internationally trusted partner offering car financing and logbook loans to its customers in 15 countries across Europe, Asia, and Africa. So we do have with us Thomas, the CEO of Eleving Vehicle Finance. And Thomas has extensive experience in asset financing, and he has been a director and CEO in used car financing businesses in Florida, USA, and a financial controller at a software company in California, USA. So feel welcomed, Thomas, to this session, and we're glad to have you, and we're going to hear more about your success stories in your field of practice. Then we have a representative from Untapped Global. Untapped bridges the investing gap for SMEs in emerging markets, specifically in Africa and across the globe, through alternative financing approaches by offering CapEx financing to SMEs while offering high-yield, short-term returns through its smart asset financing investments. So today we do have with us Yvonne Okafor, who is the investment officer for East and West Africa at Untapped Global, based in Nairobi, Kenya, where she co-leads Untapped's asset financing facility. So quickly, we would like to welcome our 3 panelists and hear from them about their success stories and the challenges they've experienced in rolling out their finance solutions to the African market. So maybe we can start with M-Copper. Mr. David, you can tell us more about your experience in Africa, your products, and the success stories. Welcome, David.
Thank you very much, Daphne.
Yes.
Yeah, so you gave an introduction to what M-Copa does already, and so I don't need to rehash that. But M-Copa has traditionally been known for financing solar home systems and smartphones and digital financial services. But we're now moving into electric mobility as we see it, as everyone knows who's on this conference, as the next big frontier for Africa, and we're very excited to use our existing model in electric mobility. I think you said we're successful already. I'd say we're still at the very early stages of piloting, as most companies are in Africa. So I don't think we're successful yet. But we are excited about is some things that are pretty, I'm sure everyone here on the call knows, but we're excited about the just the fact that electric mobility, and specifically right now electric two-wheelers, the opportunity they have to displace petrol two-wheelers on the market. There's 15 million two-wheelers in Africa, 1.5 million in Kenya, around there. And based on our experience, electric two-wheelers right now perform better than petrol ones. And on a unit economics, when financed using a pay-as-you-go model or other models, it is actually cheaper today for a customer to buy an electric two-wheeler compared to a petrol motorbike, if you include all of the petrol and maintenance costs in that they're spending daily. And then when you, especially if you're financing it on a daily basis, of which the customers, we know that a lot of the two-wheel drivers think in daily cash flow cycles. They spend daily on fuel, they spend daily on their loan to when they pay it off, and they earn daily. They earn from their Uber, Bolt apps, or from their passengers. And so when you're if you break down the economics from a daily perspective, it is about 100 kilometers is about $4 in fuel for a customer in Kenya today. And the same amount of distance on an electric motorbike is about $1 if you're charging a battery. And so you have $3 in savings per day for a customer. Now the electric motorbikes are more expensive than the petrol ones, but they're not $3 a day more expensive. And so you have cost savings from day one. And then in addition, you have fuel prices continuing to go up, whereas you have the cost of batteries continuing to decline. You have the opportunity for carbon credits. You have when electric motorbike companies get to scale, they will be competitive with petrol bike companies. And so we see all the trends moving in a direction that makes the electric motorbike a better option for customers at the end of the day. So that's, we're very excited about that. And then we're obviously very excited about the social impact that electric motorbikes can have on reduction of carbon emissions, on air pollution, and on creating green jobs for the economy. So all of that is very exciting for M-Copa. And that's probably a good enough intro for now, and I'm happy to continue to elaborate on some of those points if people have questions.
Yes, I do have a comment. What has been your experience, both positive and negative, in deployment of pay-as-you-go model in the African market for other products?
Yeah, we've had a lot of success with the model, and what the reason we think we've had that success is that compared with traditional financing, our mode of financing is a bit more customer friendly. We allow the customer to pay as they go. They don't get penalized heavily, even if they're midway through their loan. We don't repossess the asset. Now, maybe with motorbikes, we'll start to do that, but with our financing model, we're sort of trying to meet the customer with where they are, giving flexible repayment terms if they can't repay, and obviously can refund the deposit, refund if they can't afford the loan, so we don't get people into negative debt cycles. And so based on that model, we've had quite a bit of success selling solar home systems. We've had well over 1 million sales of solar home systems, and smartphones, again, well over 1 million sales of smartphones, and then also providing other digital financial services and other products. So we've had quite a bit of success. We're in Kenya, Uganda, Nigeria, and Ghana right now, and looking to open up other markets. So we've had quite a bit of success, and that's why we believe we can have the same sort of success with electric mobility.
Interesting and awesome. So we've mentioned something to do with the default of loans and asset recovery. Here we're talking about the electric two-wheelers as well as the charging stations and the batteries. How would you handle defaults in case of battery swapping or battery ownership? That's a very interesting area that we'd like to hear much about.
Yeah, everyone in the industry likes to have the debates of the swap model versus the charge model. I think it's a great debate. I don't think there's a right or wrong answer. I think there's room for both. Mcopa's right now selling electric motorbikes with that some are doing swap model, some are doing the charge model, and I think there's room for both models. In terms of defaults, one of the nice benefits of the swap model is that the customer has to come back to the swap stations often 1 or 2, 3 times a day. And so it's very hard for them, or much more difficult to disappear and defraud you and get it, and unless they find another battery, which is sometimes difficult. But Mcopa's technology allows us to remotely control, lock and unlock the bikes and track it if a customer is unable to pay, and that's what allows us to reduce our defaults. And with electric motorbikes compared to petrol motorbikes, the nice benefit is that it's easier to embed that technology in the battery, whereas with petrol motorbikes, it's much easier to hack a petrol motorbike in our experience. So we think that that's another benefit from a financing company angle. But it's all early days, and I'd say there's a lot of experimentation that needs to happen. We know that Africa and every market within Africa is very different, and all these markets are very different than Taiwan, China, and India. And so we have to define our own path for charging and swapping. But we're pretty optimistic that with those solutions the swap model has already been tried by many companies. Ampersand, Zembo are already deploying quite well. The charge model can make a lot of sense here because a lot of the urban customers have electricity at home. With electric motorbikes, you don't need expensive charging infrastructure. You can just plug it into a wall with a simple charger, and you can charge on the go. Many drivers, even though they work 12 hours a day, have a lot of downtime, even though they're commercial drivers, and they have time to top up their bikes, just like we all have time. In the middle of the day, we charge our phones overnight at home, and in the middle of the day, maybe our phone's running low. We just find a place to top it up. And African customers have found a way to do this with phones. And I think with batteries, we'll be able to do the same. So we're optimistic that both of those models, will take some time to develop, but are not going to be major barriers at the end of the day. And so that keeps us optimistic. Our biggest challenge is supply. So we're very excited about all the companies in the space right now, but we're encouragement, and we want to get more companies involved in the space to be providing good, high quality electric vehicles, and more financing in the space to support those companies. Because the biggest problem in our mind is the lack of supply. The demand is going to be there because of the economics, and the product is good.
Okay, sure. Thank you very much. Yeah, we are sure that this financing model will have a high uptake ratio because of the existing fuel systems, and we're going to achieve much success in these systems. So we can get to hear about Mogo's experience in the motor vehicle industry in Kenya. And the most interesting thing I'd like to hear about is that Mogo does not consider an individual's credit reference bureau listing as a prerequisite to getting financial services in their platform. And I would like to know from Thomas whether this could be the reason for the high uptake of Mogo's financial services in the African market. And you can also share with us, Thomas, about the details of your product and how it's deployed successfully in the African market. Welcome, Thomas.
Thank you, Daphne, and really appreciate being here. First of all, it was very interesting to hear David's comments about the pay-as-you-go model, and I think we're taking a bit different approach in terms of financing bikes. We finance more than 100,000 motorcycles and three-wheelers as of today in both Kenya and Uganda, so in African markets. We believe that we have a very good experience on what it means to manage that kind of portfolio, and both from assessing credit risk as well as collections and other aspects. We also believe, and this is the core part of our belief, that Kenyan rider is an entrepreneur, and our goal is to make him an asset owner. That's why we have, and that's the core of our approach. And I think that there is a slight difference here with pay-as-you-go model. So when it comes to bikes, we do leasing, right? We say it's your asset. You're responsible for the maintenance. You're responsible for your daily work. It's up to you. We don't interfere. We don't mess with blocking the asset, stopping you from going. It's your asset. You have to make payments, and of course, we try to have all these flexible solutions. If a customer has some challenges, we do restructurings. We work very closely with the customers to make them flexible. But the core principle, it's your asset. You're an asset owner. You're an entrepreneur. Coming back to the question you raised, and what's enabled us to operate successfully in the Kenyan market and as well as Ugandan market, I think there are a couple points there. So one thing is you need to be fast. Riders are impatient, right? Their time is money. If he's not making income riding the bike, he's not providing for the family. So speed is at the core of all operations and issuing as fast as possible. So we need to be very careful what we ask from the rider, what kind of documents, what kind of, to issue the loan, because he needs it now. So that's one aspect. Another aspect is affordable payments. So we pride ourselves, and this is our brand promise, which we will keep for electric vehicles as well, and we're doing it right now, is to be the best price guarantee. So basically the lowest payment. So when we came to Kenyan market, we were the first to offer 18-month loans for bodas. We were the first to do 24-month loans, and we're the only ones right now doing 26-month loans. What it does is with the bike prices going up, and we've seen the increase in the traditional petrol powered bike prices, the increase has been more than 20% over the last year. Customers cannot afford it. Now we need to work, we need to find a flexible solution here, and then that's what we've done by lowering the weekly payments, but increasing the tenure of the loan and making it more affordable for the customers. Also putting all the costs, taking us, the customer only needs to bring the down payment. And I think that's critical. So things like insurance, GPS trackers, they need the logbook registration, they need to go on us, and we need to, it becomes part of a loan, so we effectively financing it, but it needs to be a small barrier for the rider as possible. Otherwise, it's very hard for it to work. Coming to your question about the CRB, what we learned is that the traditional rider, he's not part of the database, unfortunately, and because the segment of customers we're talking to, they didn't have an access to bank financing historically. You could call that it's an unbanked segment, and therefore you have very limited information that you can get from a traditional sources such as CRB. What you need to do, and this is where our experience of our international experience comes into play, you need to create a fintech-based approach of analyzing other sources of information. So for us, for example, M-Pesa is critical. We're using AI models to extract different information from customers' M-Pesa statement and assess their risk. Because we want to, every single customer that applies, we want to make sure they can afford the payment. They can afford to have a loan. Of course, we miss it often. I must admit that, but you need to do your best effort, and for that you need algorithms and alternative sources of information that would reflect the lifestyle and the income sources of the rider. Another thing we do, and we have a big team across Kenya, is we do stage verification. So we actually go and check where the rider operates. Is he actually a rider? And talk to the chairman of the stage, talk to his peers, and make sure this is a real that the customer is actually in this business as of now. So just maybe to summarize and coming back to electric vehicles, what we see in the market, and I agree with David that it's a huge challenge with supply of the bikes right now. We see in general we see a lot of, I would say, public relations activities in terms of everyone talking about electric vehicles, everyone, how that will change African market, but you don't see them on the streets. And that's the sad part. And I'm very happy that we already have 30 vehicles, 30 bikes that we're planning, and we will finance them in this year. Hopefully in November, they will be out on the streets, and we will look forward. So hope you will be able to use them as well as a Boda Boda. And this is only the beginning. So we wanna scale that. We offer very good terms. So for the customers, it's only 20,000 shillings as a down payment. So it's lower than the most popular bike in Nairobi, Boxer BM150. So the down payment that we will, yes, I think financing companies to bring this business model to life and to support it, we need to take a hit on our side, and we need to make it more affordable. And we guarantee that even though the bikes are much more expensive than the usual petrol bikes, the weekly payment that we will charge will be the same or lower. Because we need to support this industry. So I hope I answered the question.
Yes, thank you very much, Thomas. That's quite interesting. Have you ever considered the leasing model where the user rents the bike and pays for the distance of duration of ownership covered while the bike is still owned or fully owned by the leasing company? Would that be an applicable solution in the African market?
Thank you for the question. I still believe, and this is coming back to our core belief, that the rider is a business person, an entrepreneur, and he should be. It should be. We believe that it should be his property or her property, and then they can take much better care of an asset because we know it's their asset. Now, coming to that, I think the batteries themselves could be on some subscription model where they would be owned by the operator or the leasing company, and at a fixed fee will be leased or let's say provided to the rider. I think that would work because what we see, especially talking about swapping stations, you need more than one battery per customer. Effectively, and there are, this is untested model. Some batteries can be defective. We talk about environmental challenges, how to dispose of these batteries. So I think that could be done much more effectively by the, let's say, company operating the swapping stations or us as a financiers. But I think the bike should be owned by the customer.
Wow, wonderful. Yeah, that's really interesting and good to know that you have given the businessman, the rider, the responsibility to take up the credit listing, the credibility, the integrity of running and managing the portfolio. So now we get to hear about Untapped Global from Yvonne. So Untapped has been in the African market for over a decade, offering investment opportunities for global investors to finance high growth businesses in emerging markets. And we have seen a successful implementation of Untapped Global's accessible financing models for small businesses that drive growth in developing markets. So we have heard of products like Flex Club, Zembo in Uganda, Mazi Mobility, Solar Taxi, and many more in Kenya. So we'd like to hear from Yvonne how these models have run in these different countries and the success stories and the key features of these different business models in the e-mobility sector. So I'll take some time to share Yvonne's presentation.
I think, okay, I'm happy for us to go through the presentation, but I figured that I could also just talk through it. So before we jump into things, I think maybe a slight correction. Untapped has actually not been operating on the continent for a decade. So our model has evolved in a lot of different ways, but we've actually been operating across Africa, specifically Kenya, initially as a installing water projects. I think for the past almost 6 years, but most recently, within the past 2 years, is when we implemented our smart asset financing model and expanded it outside of just the water business, and now working to finance different assets across the continent through operating partners, which are businesses that are running these businesses. Businesses that are running these models, and that is now our core operating model. So maybe to answer all the questions and all the details that you've mentioned, it would be good to kind of go through to really give more detail around how Untapped carries out this financing and how we work with partners. I think one of the main differences between Thomas and David's models at Uncopa and Mogo is that while some financing is provided to individuals, like individual entrepreneurs, rightfully said, Thomas, that the riders are entrepreneurs themselves. We found that a more efficient way for us to work is to partner with businesses that are already running these operations and providing the business support to entrepreneurs, and then the asset financing partners to help provide, I guess working on the supply side, as you guys have mentioned, to bring the assets, make the assets available for these individual entrepreneurs to eventually own. So maybe to give a little more detail, and we can move on to the next slide. So I think the reason why our smart asset financing model exists is just there are a lot of conventional pretty much investment models don't necessarily work for a lot of businesses on the continent, especially asset-heavy businesses. And what we've seen is that we are, according to the World Bank, there is a 5.2 trillion, there has been a 5.2 trillion gap in emerging markets when it comes to financing either software, hardware businesses, and that's kind of like the space that we are tackling in. So we can move on to the next slide to kind of get into the detail of our model. To talk about the solution that we're providing. So what we do is we provide CapEx financing for asset-heavy businesses using a model that we call smart asset financing. And this is a data-driven model, whereas we finance assets for businesses. And these are just some of the examples of the type of assets that we finance. And through the data that we're able to get from financing these assets, or we get access to the data generated from the use of the assets as a way for us to understand the operations of these businesses and understand the revenue streams, as our repayment method is less of a traditional lending method, but more of a revenue share. So we take a share of the revenue, an agreed share between ourselves and the operating partners of the revenues generated from the use of the assets for a fixed period of time. And that's how we get our repayment back. And we found that this works across these different sectors so far. And we're also opportunistically looking at some other sectors as well to grow and expand our partnerships in terms of the businesses that we work with, but then also to expand our reach in terms of the different sectors that we can apply this financing opportunity to. So we can move on to the next slide. So pretty much just to kind of clarify the model is we finance productive assets for entrepreneurs in emerging markets. We get access to their data and track each asset's usage and the revenues generated from the use of it. Based on that, we're able to now collect a share of each asset's revenue, and it's an agreed share between ourselves and the partners that we work through. And then given the fact that, again, we are a financing facility, so we do have lenders that kind of invest into us, we are able to now repay our lenders, but then also kind of make revenue from the spread between what is earned in the rev share, but then also what we need to pay back as well. So that's pretty much the easiest display of the cycle of our model and how we work with the different partners. We can move on to the next slide. And our goal pretty much is like to create a shift with priority by unlocking economic opportunity and untapped markets through digital finance. Right now, we're starting in Africa, and we've also expanded into Latin America, actually with some e-bikes that we've financed through one of our partners that expanded out of South Africa into Latin America. And our goal is to provide this financing opportunity across emerging markets. As we know, there is an opportunity. Africa has a huge untapped potential when it comes to providing capital to spur economic growth. So we're starting here, but then eventually our goal is to expand across other emerging markets. So moving on to the next section, I wanted to give two case studies of which kind of covers an example of the different models that we finance when it comes to e-mobility. So one of our operating partners is Simaboda, and their goal is to create energy infrastructure solutions to enable the adoption of motor taxis across Africa. And they're doing it through multiple ways. They're doing it through electric bikes, but then they're also doing it through battery swapping infrastructure. So this is one of the models that we've seen that would be a key, that is pretty much a key way for e-mobility to be adopted across the continent. And like I said, we work with partners that are already doing this. We don't try to we know we're key financing partners. So our goal is to provide the capital to support the purchase of these assets, to also support our partners to improve the adoption. So like for SEMA, at the moment, we are financing the swapping station and some batteries that are needed for swaps. And to our model, we'll be taking a share of the revenues from those battery swaps. Another example, which I think the more common example as we're talking about electric two-wheelers at the moment, is in the next slide, where we talk about electric two-wheelers as a whole. So we have a number of partnerships across a number of countries at the moment, through which we finance electric two-wheelers. So there are multiple players actually doing using electric two-wheelers to address a couple of business models, everything from logistics, transportation, but then a good number of them also have their own unique battery swapping infrastructure. But I think it goes back, it's almost like a chicken and egg situation where you need the bikes in order to, you need the bikes for the batteries and the swapping stations, but you also need the swapping stations for the bikes and the batteries to operate. So we play across those multiple areas as well. With electric two-wheelers, as you mentioned, we're working with a number of partners across a number of countries. In Africa, we work with the likes of Zembo, Flex Club, Green Scooter, Fika, Solar Taxi, Mazi, After Delivery, and also opportunistically looking to work with a lot more partners to also support them by financing some of these assets. And that's across Kenya, Uganda, Ghana, South Africa, Zambia as well, and then also Mexico, like I mentioned, which is our initial entry into Latin America. So in this case, on top of finance the capital costs of the bikes and batteries, and take a share of the revenue from the bikes being used in different operating models. So be it on the logistics side or be it on the transportation side, and each of the ways that we also take a share of the revenue is unique to the partnership that we have with each of the different operators. We're very proud to say that we are, we currently finance over 250 assets between two-wheelers, three-wheelers, batteries, and swapping stations. And that's electric assets, like e-mobility assets. And like I said, we're opportunistically looking to grow our portfolio a lot larger and support a lot of these companies that are looking to increase the supply of like electric two-wheelers, but then also other e-mobility assets on the continent as well.
Perfect and excellent. That's quite inspiring. And I've seen you've deployed these solutions in several countries within Africa, Kenya, Uganda, Ghana, South Africa, Zambia, Mexico. So I'd like to know, Yvonne, whether you experienced any challenges, any drawbacks while you were deploying these systems in these different countries, and what was the experience?
That's a very good question. One thing I would say is that the deployment and actually the operation is done through our partners. So let's say in Uganda, we work with Zembo, but Zembo carries out the operations. We support them by providing capital for the bikes that they use for these solutions. And same way with all these different countries and the different operators. I would say some of the challenges that I know some of our operators have faced have come in a number of ways. I think there's some regulatory challenges as governments are still trying to find, first of all, understand the benefits of e-mobility and the benefits of its adoption to the economy, both on an individual basis, but then also on a country basis. And there's also conversations being had around what supportive regulations can be set to support a lot of these companies to, first of all, bring in the assets at a low cost way, or even, and the assets go from the frame of the batteries versus the frame of the bikes versus the batteries themselves. So I think regulatory support is one of the challenges that I know a number of our operators face across the different countries. I think another thing is also just, I think there's a transition effect. While everyone is talking about it and everyone is excited about the possibility and the potential of e-mobility assets on the continent, from, you know, it's reducing carbon emissions to it reducing the costs of transportation, you also cannot, I think you can't ignore the human effect, where you have to, I think people have to learn how to shift from using ICE vehicles to electric vehicles. So there is that transitionary effect, which also has a time factor. So adoption, while adoption is increasing, I think there's also that aspect of educating and teaching people how to use or ride e-bikes versus how to ride ICE bikes. And over time, that time frame has been decreasing, right? But I think the more countries where e-bike is going to be adopted, that's also going to be an educational hurdle that's going to have to be crossed. So I think those are some of the two key things. There's also, I think, there are little things around making sure the bikes are actually set to operate on specific type of roads. As we know, some of the roads across countries in the continent are not the smoothest. That's also depending on the areas where these bikes are being used. Is it rural versus urban areas? Potholes are common in some of our countries, and we know that. So that's also another thing, because a shock that some of the ICE bikes you get from riding the ICE bikes is very different from how the e-bikes would be operated. So I think around human adoption, but then also regulatory support, I think those are some of the two key issues that tend to come up when we're talking to our operators.
That's interesting. So regulatory support and the transition to e-mobility from the conventional vehicles are some of the challenges that we've experienced. So in the swap and go charging model, where the two-wheelers and three-wheelers riders do not actually own the batteries, but lease them from a swapping station, what financing models would you recommend for the swapping station operator who takes more risk in battery ownership and even in some cases recycling of the battery waste?
That's a very good question. I don't think there's a right answer at the moment. I think everyone is still trying to find the best way to kind of bring things in, right? Bring things in and like increase the use. So if we're thinking about swapping stations, a number of players have set up swapping stations either for their individual bike use or with the partners that they work with, by providing, let's say, bikes with riders and everything, and teaching the riders how to swap using the swapping stations. I think when it comes to setting it up, I would say finding a good financier to support you to finance the actual swapping station in itself is good, because some of them, depending on how you're developing it, can be a little expensive, right? And so that's, I think, us supporting our current partner with battery swapping, not battery swap, but installing the station, but then also supporting them in purchasing the battery reduces the risk that they have in terms of, if we buy this and own it over a period of time, the payback period may be longer. The payback period is, I think, it could significantly be cut short by having the right financing partner, one. But I think secondly, there's also you being able to bring in, I would say, add on things around insurance to make sure that you're not just buying these things in and leaving them there as you kind of figure out what's the best way to operate and run the business, especially around the swapping side. But then also insurance around the batteries, in the sense that you can't always control, while you own them, their riders are going to be using them. So you also need to make sure that that is also protected in the case that anything happens, either with the rider along the way or even when swaps are happening, you're also protected and able to get your capital back. There's also kind of making sure you're adhering to, I would say, the electrical, like knowing the right electrical systems in order to set up your swapping stations, and also swap the batteries. There are different battery components and different electrical, I would say, components needed for different type of swapping stations. So ensuring that you're aware of what the right voltage is needed for your swapping station, but then also you're using the right voltage for the batteries that you have is another big thing. And for me, I feel like all the e-mobility operators currently operating on the continent are very aware of these things. But those are, I think, some of the areas we also check and also work with some of our operators to make sure that they're adhering to things, they're being safe, and they're also being protected just in case. Like protected from any liability that would come from owning such large infrastructure.
Okay. Thank you very much, Yvonne. That was quite interesting. So maybe we can hear from David in terms of on the same area on swapping stations. Is M-KOPA partnering with a third party to manage the swapping stations, or are the swapping stations owned by M-KOPA? And what financing models have you considered for the swapping station operators? David?
Yeah, thanks for the question. Yeah, M-KOPA is doing connected asset financing for customers. We're not financing businesses the way Yvonne and TAP does. So we're sort of different parts of the value chain, but we are partners. So we're partnered already with a number of swap station companies. So they're the ones who are financing the swaps stations with their partners. M-KOPA is rolling out some charging stations though, so to support the charging model. And as I mentioned earlier, we're supportive of both models, but we think that there needs to be also investment in charging, so drivers can charge as they go.
Oh, thank you. And Thomas, how has this been applied with Mogo?
I think here in this panel, we have a very good example where different financing partners can work together to bring this industry. So it was very interesting to the presentation by Yvonne because we also partner with Stima bikes, and so whereas Yvonne and Untapped are financing the swapping stations and the batteries, basically financing the infrastructure, we come in together working with Stima to buy the bikes and finance the bikes for the end customer. And where we can help also is, let's say we support the industry by paying for these bikes while they're still in India, while they're still being manufactured and pre-ordering them. And basically also, in a way, yes, financing directly the end customer, but also supporting the operator or the technology partner behind it, because it's very hard for a lot of these new market players who are in this space to actually have a working capital investment to bring the batteries and the bikes to Kenya. And that's why I think this collaboration between Untapped, companies like Untapped and like us are critical in this case to bring the infrastructure and the bikes much faster.
Yeah, that's right. So I have a question from the chat. Someone would like to hear what you panelists think of the market for e-bicycles in Africa and how financing looks like for e-bikes. So you can maybe start with that with you, Thomas.
Just to clarify, this is about bicycles, right?
Yes.
We believe that maybe there is opportunities sometime in the future, but currently what we see in most countries in East Africa, in Kenya, Uganda, is that the customers are used to motorcycles, to pikis, and we believe that changing, first of all, we would need to change the customer mindset here of the end, the people who go, who use the borders to getting from point A to point B. So I think I personally believe this is much bigger opportunity to have an impact from both environmental, social, but also just for the market is to focus on pikis, on motorcycles, and this is what we are planning to do.
Okay, thank you very much, Thomas. Pikis and motorcycles. From my point of view, I'd also like to purchase an e-bike, but I find it challenging to drive it on the Kenyan roads in the city because I'll have to brush myself with the matatus, and pikipikis move at a higher speed with irregular driving patterns. So what do you think of that? Maybe David, as and what do you think of that in the e-bikes market, rolling it out to the Kenyan population and African?
Yeah, I agree with Thomas that the electric two-wheeler motor, the Boda or Okada market is by far the largest, and the largest for impact because you're displacing a lot of petrol fuel, and is where the core market is right now. But in Nairobi, you know, we see more and more bicycles on the road. We're seeing some electric bicycles being piloted. So I think that although it's not the biggest market, there's still a big opportunity there for displacing deliveries. I think there's low-cost deliveries and opening up deliveries to lower and middle income people who usually couldn't afford it. Electric bicycles provide that opportunity. And for personal commuting, I have one. I enjoy electric bicycles, and I think that there's an opportunity there. So I think there's room in the market to change for electric bicycles. There is the risk. It is a bit more dangerous. It is difficult on the infrastructure, but I see more and more people taking that risk on the road. I see there's room for electric scooters, electric three-wheelers, electric boats. I think you know all of these mobility options. The electric business model still makes sense for all of them. And so you know we will pilot with all of the companies that are testing these right now, and I think there's a lot of room for innovation, new products that can be developed specifically for the Africa market, because not a lot of people have done that. So there is that opportunity. And there's another huge opportunity on getting more women on the road with vehicles that fit them better. There's, you know, if you look at the Boda segment, it's 99% plus driven by male riders. We're doing our own research right now. It's been very difficult to find female drivers to even research to do surveying on, but we're doing that, trying to understand their barriers, and that's 50% of the market. And I think there's room for innovation there as well to help women get better access to mobility. Not necessarily have to be the drivers, but there's a lot of access issues that have to be addressed as well, and that's a big market for businesses.
Sure, I totally agree with that. So, Yvonne, how does this market look like in the countries where you do not have a footprint? Have you had an opportunity to explore this market, and what is the outcome?
Are you talking about the e-bicycle market,
Yes.
or?
Yeah.
So in the countries that we don't have a footprint yet, I think there are a number of companies using e-bicycles in both in the countries that we operate in, but then also in the countries that we don't operate in. I think what we've seen the most is going to be echoing everything that Thomas and David have said. I think the electric two-wheeler in terms of motorbikes has the largest market share at the moment. But I think for the bicycles, we've kind of seen it more in gated community type of models, where it's provided in, let's say, a large gated community, and let's say people want to rent out the bicycles from the station to get from one part of the community to the other. Or, I mean, just to the fact that David just mentioned that he has one, individuals buying those bikes for themselves. I mean, that's the most common usage that we've seen it in both markets that we operate in, but then also markets that we don't operate in. I think it's for it to kind of shift to maybe capture some of the electric motorbike market. It's going to have to be, I think, going back to what I initially mentioned around kind of like changing customer perception in terms of what is used for what versus another thing. Right now, people are used to seeing deliveries done in, you know, like in motorbikes. So I think electric motorbikes are the easiest adoption to that. To shift to bicycles, it's being done, right? But I think it's at a much smaller fraction than the e-motorbikes are right now. I'm of the opinion I don't think that's going to change. I think the motorbikes are still going to remain, still going to keep the large market share. But I do know that because some of the bigger, I'll say e-commerce companies and just, you know, the delivery companies are using bicycles, so that will still be used. But I don't see it overtaking the use of electric motorbikes anytime soon.
Okay, that's quite interesting. So We have popularity on the motorbikes as compared to the e-bicycles, but we do have a potential in the market to exploit this, especially the individual ownership of these e-bikes. So I'd like to move to some other different area of concern in the financing models for e-bikes and on e-mobility industry. And this is quite about interest rates, fluctuations in interest rates, and the central banks in every other country increasing the rates to be able to curb inflation. For instance, in Kenya, recently we had an increase in the lending rates from 7.5 to 8.25%, and immediately all financing institutions revised their interest rates upwards and loaded this to their customers. Fluctuation in interest rates and inflation is quite unpredictable in the current economic setup. So I'd like to know, would this be a threat to the financing models that we've rolled out? And what are some of the measures that we've put in place to be able to cushion ourselves from this unpredictable circumstances? So we can hear maybe from you, David, from M-Copa.
Yeah, to give us a stinger right at the end, did you? Yeah, it is a major concern. We operate in Ghana, which I think has the world's worst currency devaluation rate right now. We operate in Nigeria, which is going through terrible, and Uganda, even Kenya. Like currency devaluation is a major challenge for us, and caused a lot of it by the inflation rates, and the increased price of capital for us and all financing companies, which is going up right now, means yes, we have to pass that on to customers. And so it is a major barrier, and we can't be profitable and therefore sustainable without passing that on to customers. So yes, it is a major problem. I think that if there are investors who want to see this industry mobility accelerate faster because of the social benefits and the long-term economic benefits, then we probably will need some creative financial instruments to maybe help accelerate things. And whether that is risk guarantees in the early days in the financing side, there's some soft capital for results-based financing that allows for this, or some areas where we can, not have to pass on all those expensive interest rates. That will help accelerate the industry, because otherwise, finance companies are not going to be able to absorb those interest rate costs. So it is a major concern right now.
Yes, that's quite a major concern. Thomas, is this also a concern in your financing experience?
So it is definitely, and what David mentioned in terms of exchange rates, that's been a huge issue for us as well. We actually lowered the pricing for customers, border riders in October, because we want to make sure it is affordable. It is, we can charge very high rates, but if customers cannot afford it, there is no point in that. For us, I would see a bigger risk, which ends up in the pricing, is taxes, and the government has. We are very concerned about some excise duty initiatives that have been in the recent months, and in general the taxing, the same issue of bringing these electric bikes from other countries and assembling them in Kenya, but the tax implications, because they have much bigger impact on the price of the vehicle and invent on what the end user pays. So for us, yes, forex, exchange rate fluctuations or depreciation of a currency, and tax, I would say tax regulatory environment has been the two key challenges.
Yeah, so tax regulatory and currency devaluation are some of these challenges. So Yvonne, how have the investors what was the investors' experience, and how does it touch on investors' side of things, these particular challenges?
I feel like we're all pretty much just going to say the same thing. It is a concern for us. I mean, when you're providing any type of financing and you're expecting repayments with any type of additional return, the interest rates kind of come into play. I think it's unavoidable. Unfortunately, that's one of the few things that we can't control, right? And we have to, at the end of the day, we are in the business of making money as well, in addition to, increasing the impact or individual impact on, or the impact on individuals in different ways by making sure or supporting the adoption of mobility. So we have to find a way to balance that. When it comes to the effects of interest rates on the investment side, we have to consider it on a country by country basis. There's the global effect, but there's also the local country effect. It's very different in countries where, let's say, the currency spread between, or the currency exchange rates are significant, or maybe in a country like Nigeria that has two different exchange rates, and you have to kind of adopt your model depending on who you're serving. Are you going to use the local rate, or are you going to talk about the CBN rate? Or, just like David mentioned, Ghana has definitely had an interesting run this year. But I think one thing that we've done very well, and I think this speaks to our partnerships with the companies that we work with, is just be very open with the fact that rates change, and currency risk is something that we also face. And something that we also have to consider throughout the duration of our partnership. So we have specific clauses within our agreements that address this. And we also kind of cover this during our conversations before even finalizing contracts. And I think based on the agreements, we also have a couple of action items that we take with our partners, be it reassessing the partnership or reassessing the terms when there's a significant drop or appreciation of the currency. And then we kind of find another good middle ground, because for us, because we're partnering with businesses and we're using a rev share model, again, it's a partnership. So we have to make sure that both sides are making money while that partnership is in play. So if the currency issue gets too bad that one player is not making money, it doesn't necessarily make sense to continue the partnership. So we're always reevaluating, always keeping the communication line open, to make sure that we're all, to make sure that when, let's say, if the currency depreciates, let's say 20% within a week, we can talk and be like, okay, what can we do to make sure we're still working well together, but then also to make sure that we are all making money, but then also still maintaining the impact that we all want to have on the individual entrepreneurs that are getting these assets, but then also on the economy as a whole. So it goes from just first of all, understanding that you can't control it, reevaluating terms when you need to reevaluate terms, but then also making sure that our contracts also address these things, as we know it's going to be a core risk that we have to continue mitigating over the course of partnerships.
Sure, yes. Yeah, this risk has to be continually mitigated through continuous evaluation, and we have to adopt a model that suits a particular country or a particular business environment. That's great, and I think we are almost coming to the end of our session. So I'd like to get the parting shots from each and every panelist on what's next in e-mobility financing for two-wheelers and three-wheelers in Africa. So we can start with you, David.
Yeah, I think we need to all just pilot, and as I mentioned earlier, let's create a solution that works for Africa and works for our specific countries in Africa. Each country is different, and it's going to take some innovation, and some flexibility, but a lot of momentum. And so despite there being some competition and lots of companies, I think there's not enough. And I think we have a lot of us to all innovate. We know that Mogo does some really innovative things in financing. We're trying some different things, and we have to push each other on the financing side. We need the bike companies to be pushing each other on the bike design and getting them to be better. And we need to be testing out swapping and charging. And we all need to just push together to accelerate the industry, because at the end of the day, we're all affected by climate change. We're all affected by terrible air pollution. And we're all affected by current economy issues. And so if we can all stop paying for fuel and maintenance, then it's going to save us all a lot of money, and it's going to really help the environment. And so I think we all have that benefits for all of us. So we should be working in this together.
Sure, I totally agree that we should be working on this together to be able to curb the environmental degradation. So Thomas, what do you have to say as your parting shots?
This is, I think this is a great opportunity for the market and for Kenya and for East Africa in general. And I would like to invite bike companies, bike operators, technology partners that are developing this business model, developing the bikes. We're happy to finance. We're happy to bring more bikes to the streets of Nairobi or any other place. So if you have anything interesting going on and you have the bikes and you're looking for a financing partner, feel free to reach out to us and we will be very happy to support you.
Yeah, thank you very much. So I think towards the end, we will share the contacts and links to be able to get in touch with our partners, and you can be able to get in touch with Thomas and get different solutions for your market. So, Yvonne, what's your parting shots on the future of e-mobility financing for two-wheelers and three-wheelers?
So I think taking a page out of David and Thomas' books, I think three key things that's going to be very important for us to increase the adoption. I think, yes, competition is healthy. I'm always going to say this, so we are looking for more players and more operators across the continent, testing out different models. Innovation is great, so looking forward to seeing a lot more of that. Collaboration, I think, is another key thing. It's like, while competition is great, I think there is an opportunity for collaboration within the industry as well, from both operators and also financiers. I think, just as Thomas mentioned, we're already indirectly collaborating. So there is a space for more of that to happen in a lot of different ways. So, and then I think the third main thing is just regulatory support. I know there are a number of governments that are already starting to talk about different regulations or supporting e-mobility in a lot of different ways, but we need more of that. We're still at very early days. People, yes, might be working within the system, working around the system, but I think we can all work together to develop a system that supports everyone and all the players to both increase the adoption of not just two-wheelers, but other larger e-mobility assets as well, for individuals and businesses to continue operating. And again, I think on a different note, Untapped is, like I said, e-mobility is a strategic area for us, and we're already partnering with a good number of companies across the continent, and we're opportunistically looking at working with a lot more. So contacts are going to be shared afterwards, but if you are operating a business that uses e-mobility assets, we're always very happy to talk with you and find a way to support you to finance those assets, bringing them onto the continent, and also, you know, test out your innovative models with a couple of pilots. So yeah.
Yeah, I totally agree. Innovative models and a favorable regulatory support system will be a key driver to the growth of the e-mobility business in Africa. So this brings us to the end of our session, and I take it back to you, Tom, to give us the next steps.
Great, thank you so much, Delphine. There was a lot of really interesting comments being made there, and I just love to see the level of support and enthusiasm for the sector. And I think it is also really key that we have this diversity in financing models as well. You know, there's different customer segments that require different financing needs. And I think it's important that we're able to test all of these out. So I'm glad to see all of that happening. I'm really grateful to all of the panelists for joining us today. I think we had a really interesting conversation here. We will be continuing at 3 p.m. with a conversation around mini grids and electric vehicles on mini grids. So join us then, but for now, thank you all so much, and I hope you have a wonderful afternoon.
Thank you. Bye.
Thanks all. Bye.
Cheers.